Hello, welcome to Chapter 2 of Internal Auditing and Control Systems. Looking at page 2-1, we see our learning objectives. This chapter is pretty much foundational and giving you some guidance about the history of the internal audit profession. I'm not going to bore you with reading what's actually in the text. I will point out some key points here. If you look at page 2-5, the definition there of internal audit. What is internal auditing? Independent objective assurance and consulting activity designed to add value. It's very important. You're adding value and improving the organization's operations. So many times we think, as we pointed out in the last chapter, that we're just trying to catch folks doing something wrong, and we're really trying to add value. We want to take out cost-added operations and add value. And so think of that as being a key part of a company in trying to drive bottom line performance. It says it brings systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. Looking at page 2-7, the code of ethics there, talking about integrity, looking at really integrity, objectivity, the rules of conduct there. I mean, integrity is so important. The integrity of internal auditors establishes the trust and thus provides the basis for reliance on their judgment. Now, that's something we'll look at here in this case that's assigned for this module here at the end of this lecture video. But we're to perform the work as internal audit with honesty, diligence, and responsibility, observing the law and so forth. But we have to be objective, right? We have to be objective according to the code of ethics. We have to exhibit the highest level of professional objectivity in gathering, evaluating, communicating the information about the activity or process that we're looking at. In the case of this company that we're looking at in case 2, this division, being objective about the operations there. Shouldn't participate in any activity or relationship that may impair or be presumed to impair their unbiased assessment. We have to watch the perception as well, whether we're biased or not biased. We need to make sure we don't have the perception that we could be. Page 2-8, we talk about confidentiality, not disclosing information without appropriate authority to do so unless there's a legal or professional obligation to do so. Competency is very important. Very important. We are competent. Engage only in those activities that we know that we have knowledge about, expertise in. Doesn't mean that we're, as an internal audit, we're experienced in all areas. You might be someone who's experienced in certain areas of a company, maybe the costing system, but you know nothing about the IT side. So you're not called to be all things, but for the areas that you're engaging in, you should have a skill set for that. Top of page 2-9 mentions the internal audit services in accordance that we're performing those audit services in accordance with the international standards for the professional practice. So the remainder of this chapter talks a lot about standards that are out there. And like most standards, they're pretty broad, not very specific, and there's ways that we can apply those standards. But let's just look at a few of these standards as we go through, because they're really a framework for a lot of the value-added activities that we do in internal audit. They talk about the 3 types of standards on 2-10: attribute standards, performance standards, implementation standards. They even go into the detail on 2-11 about how the standards are numbered, the naming convention with the attribute, the proficiency, and the due professional care, assurance, and so forth. So they have the assurance there, or the attributes of that they talk about first. And then there on page 2-13, under these major categories of 1,000, 1,100, 1,200, and 1,300, very specific there about the purpose, the authority and responsibility, really the charter. What about our independence and objectivity? What about proficiency and due care? or do professional care. Also, we need to be independent and be objective, as we just talked about. Independence is so important. Having an unbiased mental attitude in our operations of what we're doing, the processes. And talking specifically about conflicts of interest, look at page 2-14. They give several examples there of potential conflicts of interest. A senior manager from another area of the organization is asked to become the chief audit executive, or an employee moves into the internal audit function from another area of the organization, or rotates through internal audit as a part of his or her training regimen. Sometimes that happens just for training, especially if you're in an internship. Of course, they don't have broad powers like someone who is a permanent fixture there. What about internal audit? With specialized accounting expertise is asked to assume a temporary accounting position. All 6 of these here on 214 and 216 or 215, very, very good examples. They also talk of task-related threats. This would be an example of someone auditing their own work, which we know is not a good thing. What about personal relationships, conflicts of interest there, maybe family or close friends in an area or division that you are auditing? And that takes us to 216, which is about proficiency in due professional care. The standards require internal audit functions that you have the knowledge and the skills and other competencies to fulfill these responsibilities and exercise due care. You need to know the knowledge of fraud risk there in the middle of page 2-16. Chapter 8, we go into a lot more detail of that, about the risk of fraud and illegal acts. And then chapter 7 there, they mentioned the information technology risk and controls, how big that is now, where accountants and internal auditors asked to be really knowledgeable in some areas that maybe we don't have the expertise. It doesn't mean everyone needs to have this expertise, but whoever's conducting an internal audit, but whoever's conducting these type of audits needs to have that skill set. And then they go into 2-17, the actual various certifications. You know, the one that we hear about the most is the CIA, Certified Internal Audit. One of the big three, in my opinion: the CPA, the CMA, and the CIA. CIA, I think I mentioned last time, is a 3-part exam. I don't remember the 3 parts. Each one is 2 hours long. I think one of them is 2.5 hours because it's a 6.5-hour exam, well, less than it used to be. But that's something that you might aspire to be someday as a CIA. A new one is the CISA, Certified Information Systems Auditor, top of page 218. I don't know much about that one, but it sounds like it would be something good to have. By quality assurance and improvement programs. You ever think about internal audit is associated with associated with quality assurance? Also, you're trying to drive quality improvements and effectiveness, efficiency and effectiveness in what you're auditing, but at the same time, your internal audit function should be part of a continuous process improvement. Much like we have in the AACSB, every 5 years, we go through a CIR, continuous improvement review over our business program and our accounting program, 2 separate accreditations. And they want to see that we're improving our processes, improving our education, improving our learning, improving the technology. It's gotten really to be a hot button with the AACSB. And likewise here, quality assurance and improvement programs, we want to have that type of improvements, just like manufacturing does with their Lean and Six Sigma movements that are going on. Let's see, chapter 9, or bottom page 219 talks about chapter 9, managing the internal audit function. We'll read about more details there about implementation of this quality assurance and improvement. And so that brings us to 2-20 with the performance standards, 2000, 2100, 22, 23, 24, 25, 26, all of those are listed here. And I'm not going to read the book to you. more than already in. Look at 2-22, the chart there, exhibit 2-7. Good job there showing the breakdown of the engagement planning the engagement, performing the engagement, communicating the results, monitoring the progress, each of those. Then over on 2-25, a lot of times these standards need to put some wheels on it so it's understandable and practical. And so here we see, I think, 3 different types of guidance that are used: practice advisories, position papers, practice guides to actually read a standard and say, well, how do I actually implement that, right? You can read that on 226, 227, 228. And then finally here in this chapter, the last couple of pages, how does the International Professional Practices Framework, how is it kept current? Well, you've got global ethics committees, internal audit standards board, professional issues committee, similar to what you see in the accounting profession. Internal audit has their own set of bodies that seek to improve the processes for internal audit. So that's pretty much chapter 2. Of course, you need to read all of that in order to answer these multiple choice questions. That's because that's part of the deliverables, right? The other part of the deliverable is this case number 2 that you need to do for this chapter. It's a good little case here. Mark Hobson, bottom page 2-40, is an internal auditor by Comstock. He's auditing a division. This division is obviously a substantial part of their business. Got some issues there. He's got two potential observations that concern Mark. One of them has to do with inventory, having inventory on hand that appears to be obsolete because it's a part that is used in a product they no longer sell and no longer manufactured, so it's no longer sold. That's the first problem. And the second issue is, or observation, it's the correct terminology, is 180-day-old accounts receivable still carried on the books as collectible year in, and he sees that as an issue. And so he talks to Brenda Wilson, who is the division manager's administrative assistant, who did this, and not the division accountant, strangely enough, refused to discuss the circumstances of Brenda's actions. So it sort of leads you to believe that this individual who's over the division is having someone who's not an accountant not make these entries or not do anything about something, because Brenda Wilson probably doesn't have any financial knowledge or accounting knowledge of what is right and what is wrong. It may appear to be wrong, but also you can justify what hasn't been done based on what you're going to read in this case here on 240, 241, and 242 before you answer the questions on 243. So read through this, and obviously when Mark talks to Brenda, she has a justification for why she did what she did, and then she got sort of bargained at the end, alluding to the fact that she knows what she's doing is wrong about pushing out past year end, because external audit has already been there, because that's the next conversation that he has with the division manager, Brenda's boss, and finally the internal audit director, who Mark works for, and really not wanting to do anything either, since internal audit is a part of the company. It's supposed to be separate physically, but it's part of the company that they work for. They're paid by the same payroll department. And so the questions here are on page 243. You want to reference this IA Code of Ethics, identify three specific rules of conduct relevant to this case. Using the rules of conduct, you identify as the context, discuss the ethical issues raised in the case. You need to type this out. Don't turn in handwritten stuff I can't read. Type this out, use good grammar, right? And should be real short answers. These should be long long answers that you're supplying for this. Now, there's one exam at the end, but for each of these chapters, you need to have detail exactly what the answers are. And it says here, discuss how the ethical dilemma Mark faces might have been avoided. In other words, discuss specific things complex management or internal audit might have done to reduce the risk of such a situation arising. I can give you some information, but I'm not going to tell you everything that you should have learned in this point in your career from an undergraduate degree, maybe work experience, and now this far along in your MAC program. So what are some things there that should have been done? And item C says, clearly indicate what you would do if you found yourself in Mark's position. Briefly explain why. Does that mean I quit my job? Does that mean I stay there and submit the report as is? Catch all the grief that you know you're going to get because by not writing up the accounts receivable like it should be done and writing up the inventory, then they're going to get bonuses for that, which is what everybody is all about. And of course, writing that off as well is going to lower earnings, which lowers earnings per share, which is going to impact the stock price, right? Which is what it's all about. It's what they're all thinking of. It's going to impact Mark's bonus, right? Just like the rest of them. I assume he's probably getting a bonus. I don't know, maybe not, since he's in internal audit. But regardless, I mean, what are some things they could have done? You know, item B there, I can think back in my days in inventory management as a controller, as a division or at the plant level, our corporate office higher up, they would always have an allowance set up for inventory losses, for unexpected physical inventory losses, which is what this is. This is obsolete. That was always one of the first questions I would be asked by an external audit. Do we have any obsolete or slow-moving inventory on your books? Especially the obsolete, meaning you've got an asset on your books that shouldn't be there. And to encourage us to not have these physical inventory losses that surprises everybody at year end, because you've got internal audit there and external audit watching what's going on. In this case here, external audit was there and watched the inventory, but obviously they didn't tell them that it was obsolete inventory, and they're not going to know that unless somebody in the company tells them. So the inventory was accurate, but they've got inventory that shouldn't be on the books. But to encourage from the corporate level, this is one thing that you should write about and maybe research about, is inventory that is obsolete, to encourage plants or divisions in this case to write that off, not to have it on your books. They would give you authorization through a form, like a material disposal form. We had what's called an MDRA, Material Disposal Request Authorization. And that form would be filled out by the plant level. We would write the inventory off with a journal entry or an inventory transaction, which became a journal entry that went against our books. But we would submit that to corporate office and they would reclassify that loss off of our books to the corporate books. That was one thing that would be done. The second thing is they would not tell us, they would have maybe a allowance for inventory loss already booked as a contra account to inventory that went to inventory expense or cost of goods sold, in essence, for maybe $100,000 a year in case you had an inventory loss of $100,000. And that was made dear and near. That's what the corporate offices should be doing for situations like this that arise. These are divisions, right? There's a higher level than divisions, corporate level, that should be considering that, you know, these plants are trying to, these divisions are trying to make money in order to get a bonus. Well, you know what happens? People will do things that they shouldn't do. In this case, probably the plant accountant didn't want to do it. So this Brenda, who works for, administrative assistant, works for this division manager, she's going to do whatever the division manager tells her to do and come up with the reason why. What about accounts receivable? Why do you have, drill down into it, why do you have accounts receivable that's on your books? It's 180 days old. You know it's not going to be collected. Why is it 180 days old? What was it a year ago? Can you go back and look at the detail there? Maybe it wasn't. Maybe they had 90 days or 60-day inventory. Has it all of a sudden gone from 30 or 60 all the way up to 180? Or has something happened during the year to jump up to that level? Is there some type of a COVID epidemic going on in this situation? Probably not, since that's sort of a once in a lifetime thing that caused people not to be able to pay their bills. And maybe it is collectible. More than likely has, in an effort to increase sales, maybe your collections or your credit department is what I'm trying to think of. Your credit department has eased the terms there and is giving credit to customers that shouldn't be getting credit, but they're doing that through sales. Sales is pressuring credit to give the credit department to give credit to someone who's not a worthy customer. And so you made the sale, booked the top line, but now you're not willing to book the bottom line, then it's a write-off. What's going on there that they really need to get a handle on, because this internal audit has caught something here that has a lot of tentacles going out there, that has all types of, and those are just a few. There can be a lot of things going on there as to why. All right, so that's just sort of a brief overview, but do a good job there. You should write really probably 1,000 words about this case. I know I had a 5210 that I just taught. I know some of y'all were in that. You're used to writing 1,500 words a week. But in this case, you really ought to write, I don't know, 1,000 words or so. Response to this case, and of course, you need to answer those multiple choice questions. But take a stab at that and be sure and get that turned in by the designated date, and we'll look at chapter 3 next time.